Hi, my name is Mike Matos. Thank you for tuning back in with me today. I want to talk to you today about term insurance and some things that you need to make sure is included in your term policy. Term insurance is purchased for a specific period of time. Unlike whole life insurance is purchased and you have coverage for your entire life. Term insurance, you have coverage for a specific period of time. For instance, 5 years term, 10 years, 15, 20, 30, and a few companies now are offering 40-year term. A lot of people who are buying new homes purchase a term policy that will cover their mortgage if they pass away before the mortgage is paid for. So a lot of times term insurance is referred to as mortgage term or mortgage life insurance. So pretty much helps take care of the home if the breadwinner or whoever's responsible for paying for that mortgage passes away. However, there's a lot of people in a lot of other situations and that are buying term insurance. So term insurance is a very popular product. But something that a lot of people don't know is there are some things that needs to be included in your term policy. And that's what I want to talk to you today. Some things that you need to include in your term life insurance. And as an agent, I try to educate people about these provisions that can be added into your policy. They're called riders or provisions that's attached to your term policy. One of the main riders or provisions that I always try to educate my clients about is what's called a waiver of premium rider. What a waiver of premium rider does is it ensures that your premiums are paid if you become totally disabled during the term of the policy. So if you have the policy and then you become totally disabled down the road, then you never have to make another insurance payment for the length of that term. Another rider that's a good rider to have on your term policy is a guaranteed insurability rider. And what the guaranteed insurability rider is it allows you to purchase additional insurance later in life without having to prove insurability. So if you become sick 15 years through that 20-year term and you have a guaranteed insurability rider, you can add additional insurance without having to prove your health, without any if you got sick, if you got a terminal illness, you can get extra insurance. And that's a great rider to add on there. Another rider that I like to have on term policies is what's called a term conversion rider. And basically what that allows you to do is it allows you term insurance for a specific period of time, but it allows you to convert that term at a later time in life. It allows you to convert it to permanent insurance before the term expires. So let's say you have a $100,000 term policy on a 20-year term, and in 15 years you can convert a portion of that to a permanent life insurance policy. That's a great rider to have on your term insurance. Another one is the accelerated death benefit rider. This rider is normally included on most all term policies at no extra charge, but the accelerated death benefit rider allows you to be able to utilize a portion of the benefits, usually at 75%. So in other words, if you have a $100,000 life insurance policy, a 20-year policy, let's say, and 15 years down the road, you become terminally ill with cancer and you're only given a year to live, then you can take up to 75% of that policy while you're still living. That's a very good rider that needs to be included on your term insurance. Another one is the accidental death rider. You can get this for pennies a day added to your term policy. And what it does is it provides an additional death benefit if the insured's death is the result of an accident. So let's say you have a $100,000 term policy. We'll just use that figure again. And you have an accidental death benefit rider attached to that at 100,000. So if you passed away due to an accident, the term policy would pay the face value of 100,000, but then the accidental rider would kick in and pay an additional $100,000, so you would get 200,000 rather than 100,000. A great way to get a little extra insurance. And then we have what's called a return of premium rider. I think this is a real great provision to put into your term policy. Return of premium. I've had a lot of clients that's had 20-year, 30-year term policies, and then they come to me when those 20 and 30-year term policies are getting ready to expire, and they've scratched their head and they've looked at me and they've said, Mike, I've paid premiums for 30 years and I didn't die. I've thrown my money away. And while it feels like they threw their money away, they were covered for 30 years for life insurance. But what's so great about the return of premium, and what I like to educate my clients about, is if you pay premiums on a 20-year policy or 30-year policy, and you outlive the term of the policy, you live those 30 years or those 20 years, then the insurance company is going to say, thank you for not dying. Congratulations. Here is every dime of your money back. And they're going to send you every premium back to you that you have paid over the years of that term. Now, friend, that's a win-win situation. That is a no-brainer. If you pass away, you use the benefits. If you don't pass away, here's your money back. So those are just a few things that I want to talk to you about today, some riders and provisions that you need to make sure is in your term policy. If you don't have term insurance yet, please go to our website, www.cheaplifeinsurancerates.webs.com, and give us a call at 870-344-2432. I want to make sure that you are covered. Also, if you already have term insurance, get your policy out, talk to a life insurance agent or to your agent, and do a policy review. Make sure these provisions are included in your policy. Thank you, and you have a wonderful day.